Hey everyone, welcome back to Corporate Decoder. Today, Hawkeye Digital Incorporated just filed an 8K report, and I'm seeing a major shift in their business direction. Quick note, this is not financial advice, just my take on public filings for educational purposes. They are officially changing their name and dramatically increasing their authorized shares, which could signal big future plans or significant dilution. This filing is a current report, meaning it is for significant events that shareholders need to know about quickly. The big news here is that Hawkeye Systems Incorporated is now Hawkeye Digital Incorporated. This name change, effective the 20th of August 2026, signals a potential pivot or a rebranding effort for the company. The company officially filed an amendment and restatement of their articles of incorporation with the Secretary of State of Nevada. This document basically rewrites the company's foundational rules. Remember, the shareholders already gave their approval for these changes back in June of 2026. So, the first major change, as we mentioned, is the name change from Hawkeye Systems Incorporated to Hawkeye Digital Incorporated. This isn't just cosmetic. It often suggests a new focus or a significant shift in strategy, perhaps moving into more digital-focused services or technologies. Now, this next part is a big one. They are massively increasing the number of shares they are authorized to issue. Previously, they could issue 450 million shares, made up of 400 million common shares and 50 million preferred shares. They've boosted that to a staggering 10.05 billion shares total, with 10 billion common shares and still 50 million preferred shares. This is an increase of over 20 times the previous authorization for common stock. This kind of share increase can be used for many things, like acquisitions, raising capital through stock offerings, or even stock splits. Given their current market cap of around $44 million, this expansion is truly massive. Another significant change is how their board of directors is structured. They are now classifying the board into 3 classes. This means that directors will be elected for staggered 3-year terms, with only one class being up for election each year. This is a common corporate governance practice that can provide more stability and continuity to the board's decisions, making it harder for a sudden change in control. Along with the articles of incorporation, the company's bylaws were also amended and restated, becoming effective on the same date. Bylaws are the internal operating rules of a company, so these updates likely align with the changes made to the articles. The amended and restated articles of incorporation are filed as Exhibit 3.1. This is the document that details all the changes we've just discussed, including the name change and the share structure. Then we have Exhibit 3.2, which is the amended and restated bylaws of Hawkeye Digital Incorporated. This document provides the more detailed operational rules of the company. There is also an Exhibit 99.1, which is a press release published on the 24th of August 2026. Press releases are often used by companies to communicate important news to the public and the market, so it is likely this release elaborates on the strategic implications of these filings. The report is signed by David Watchman, who is listed as the president. This is the same David Watchman who, according to recent news, along with Martin Sumichrast, increased their controlling stake in the company to 90% in June of 2026. This consolidation of ownership, combined with these significant corporate changes, suggests a strong push from the current leadership. The biggest story here is the dramatic increase in authorized shares. This move from 450 million to over 10 billion authorized shares is enormous. For a company with a market cap of only $44 million, this suggests a very aggressive plan. It could be for a major acquisition, a significant capital raise, or perhaps they are preparing for a much larger stock issuance in the future. Given the context of their recent news about pivoting to merchant banking and expanding their share pool, this massive share increase likely fuels that new strategy. It is a huge vote of confidence from the controlling shareholders like David Watchman. But it also means a lot more dilution for existing shareholders if new shares are issued at current low prices. Think about what happened with companies like Kodak in 2021 when they did a 1-for-20 reverse split. Their stock price eventually dropped significantly, and about half of microcap companies doing reverse splits end up delisting. While this is not a reverse split, the sheer scale of potential dilution is something to watch very closely. The risk for current investors is that if the company can't grow into its expanded share count with successful new ventures, the value of their existing shares could be significantly diminished. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.